Hey, good morning, YouTube. Welcome to my channel, Chandler's Retirement Live. Is this your first time here? Well, I'm Chandler, and I want to welcome you to the stream. So, in the stream, what I do is, I trade the market. I trade options. I trade either SPY or the S&P 500, right? And I do that through SPY. And I'm just trying to get my phone set here. Um, nope, that's not what I'm looking for. Okay, there you go. SPY, the S&P 500, and or the Nasdaq, and I use QQQ to trade that. Well, today is Fed Day. Today they make their decision again whether they're going to raise or lower interest rates. And so, you know what normally happens on days like this? Well, normally the market trades sideways right until that 2 o'clock Eastern Standard Time. Uh, when the feds decide what they're going to do, and then half hour later, Powell comes up there and makes a speech. Now, 99% chance that they're probably not going to do anything with interest rates, but they'll dissect his speech, right? They'll look for words to give them clues about what they're going to do in the future, right? The next meeting, are they more likely to raise interest rate or lower interest rates the next time they do meet? So the I won't say it's going to be an exciting day. Normally, a lot of traders will take this day off simply because there's nothing going to go on until that 2 o'clock p.m. hour, unless there's other exciting news out there. And I don't know what other exciting news, but let me share my chart. We'll talk about a couple of things real quick before the market opens in about 5 minutes. So there's my chart. So on the weekly is red, the day is red, the hour is red, right? What did we do yesterday? Well, we just traded in this channel, and if you got caught in that, like I did, all you did was you got chopped up, right? Got to kind of remember a lot of times that I got to kind of remember a lot of times that when you have these type of movements, when you get chopped up, when it trades sideways, that you got to take your profits a lot earlier than later, and I didn't do that, and so I got chopped up several times on some trades. So what are we doing in pre-market and overnight? Right, overnight pre-market, nothing, right? Nothing. It's just trading sideways down for probably the last 1-2 weeks. That's what the market's been doing, right? Bigger range, but it's just trading sideways, trying to decide, or it's waiting for something to come out, and it could be the Fed meeting. Get that out of the way, and then they decide where to go. Right? They decide where to go after that. So not sure where they're going to go, what they're going to do, but it looks like we're going to stay in this channel. So I'm going to watch this channel and then see what kind of market movement we get. Now, I might not even take a trade this morning until the 2 o'clock hour. We'll see how all that sets up. But currently, that's kind of what I see. So it might not be a very exciting day or exciting morning watching the markets. These are some of the days where I'll sleep in, and I'll get up at uh, 10, 11 o'clock, take my shower, eat breakfast, and then get ready for the 2 p.m. meetings. Right, that's usually when the market moves. So we shall see. But I'm going to live stream. I'm going to keep it on, whether I trade or not, and we'll see what the market's going to do here in about 2.5 minutes. We'll go from there. Now it looks like we're at the top of the channel here, right? Got a small channel here. Obviously, we got a gap up top. We got a gap below. We are above the weekly low, right? Which is a good thing, and you can see it down here. If you pull up a weekly chart of the SPY, you can see it there. So the fact that we're up above the weekly low, it's a good thing. On the day, you can see here on the day, how do we do? Well, we made higher highs, higher highs, and yesterday was kind of a lower low, right? You get that pullback every now and then, but the expectation is, the next candle is going to be green, right? We're going to have a green, and we're going to come up uh, to this green line, right? The 570. Maybe, maybe not. Market's going to open up here in about 1 minute. So I just want to look at options real quick. I'm going to trade SPY today. Let's look at the Q options. What are the Qs doing? Okay. About 21 seconds. I'll move back to my 1 minute chart. The SPY, not the Qs, the SPY. Now I can switch. I switch between SPY and Qs. I'll watch each one, and just depending on where the market is moving, what's stronger than the other, I could trade it. So where are we at? We're at the top of this channel, right? So if you look at a 30-minute, pull it out just a little bit. We're at the top of the channel. What's most likely to happen? I don't know. It could gap and go, and or we could come down and fill the gap because there is a gap right here, and then it reverse and come back. But we don't know until we know. What we do know is that it gapped up. It's what kind of candle it puts in for the first 1 minute. I currently don't have anything loaded up. Don't have anything loaded up in my active trader right now. At least we opened up green. That's a positive thing, right? Everything is green right now. Can't argue with that. So there's the 1 minute. Making lower lows on the 1 minute. So if you're new here, so I usually wait for the first 15 minutes, right? Some people will wait 5 minutes, 15, 30, 1 hour before they make their first trade. I wait the 15. Why? Because that would tell you that, hey, maybe the market's going down, and then what does it do? It gives you a red candle going down, right? It's a red candle, and it's a lower candle, and then it turns around and uh, we got another candle, and it's probably going to turn into a three because it's probably going to go and make a higher high, maybe. That's its goal. We'll see if it can get there. Oh, there you go. Turned into a three. Higher high. We kind of said that. Hey, good morning, David. Head and shoulders. Yeah. Hey, good morning, George. All right, we're making higher highs. I always like it when the market goes up because if you have a long-term uh, portfolio, then that's going up. If you have a 401, that's going up. If you have any type of investment vehicle, that's going up. So it's always a good thing to see the market go up. Hopefully, everybody had a good evening yesterday. Listen to the news, Putin Trump call, whether they can get a peace deal, ceasefire, stop killing each other over there. And this is coming from a military retiree, right? Yeah, and you never want to be in war. War is hell. And I was listening to a little documentary on on how the Russians actually captured one of the cities where they used the coal mines. Oh, that was amazing. That was an amazing story, amazing tactic that they utilized to fake out the Ukrainians and snuck into some coal mining tunnels, got behind the Ukrainians, and man, once they all broke out, they started fleeing. Once they knew that they were getting encircled. When you get scared for your life, the only thing you could think of is to run. And that's exactly what they did, especially in their country where I would think that being captured by the Russians, not a bad thing. All right, so we're making equal loads right here. Still got this gap, right? Still got to fill this gap. I hear you there, David. Yeah. Tell you what, summertime Kuwait's one hot place. Want to be there? It's like taking on a woman's what you call it, hair dryer, right? And just stick it in front of your face and blowing hot air at you. Yeah, that's miserable. As I used to say, I wonder why they're always fighting over there. Man, it's just miserable. The weather's miserable. The heat's miserable. But we had a McDonald's over there. They made sure they put a McDonald's, KFC. Remember KFC and some other some other American joints there in Kuwait. One of the places where you had to actually fly into before you went to Iraq or Afghanistan. Then they changed all that and they started sending everybody to Qatar, right? Qatar. Probably a lot nicer place, Qatar. In Qatar, you had bars. You You go to the bar and drink a beer, put on entertainment. All right. It's a good candle to start there. Still got to wait my 15 minutes. Let this market hopefully um, show me a trend, what it wants to do, at least until the 2 o'clock hour. Hey, not a problem, George. Not a problem, man. Appreciate it. Yeah, sandstorms. Oh my God, you're right. Oh man, I've been in some sandstorms where you could see it coming, and you're like, oh man. Some of them sandstorms be having like lightning and rain and hail in it. Then when it does rain, it's raining sand on you. Ugly, 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 ugly. See, one, two, three. You expect the green, but yeah, you. We hope that they'll find a way to have peace there in Ukraine that won't require American soldiers to have to go over there and do peacekeeping. That's not fun either. You got too many rules when you do peacekeeping. Your ROE, the rules of engagement, right? So you can't do certain things, no matter what the other side's doing. You have those rules of engagement where sometimes those things will put you in a hurting situation. So we're making lower lows. See if this pivot point holds it back or if it breaks through. It's much like being a cop there, George, where I always say, yeah, you might have the best well laid plan, but as soon as the first round is shot, some people just go crazy. You don't know what or how you're going to react. Everybody starts scrambling, and that's where your training kicks in. It looks like it wants to break through this and come down and close the gap here. Yeah, yeah. People react in different ways. I mean that fear, fear of danger kicks in, survival kicks in. And if you're not a seasoned or a well-disciplined person, then your body tells you to do all the wrong things. But yeah, I hope they find a way to bring peace over there. Although if they do, then we're still going to have to keep paying a price. We'll have to send them some more money for one reason or another. All right, so here's the channel it's making. Channel. It's more like let me redraw this. Something like that. That's what it's doing until it's not doing it anymore. It's like the first leg. There you go. One, two, three. Turn red. Whoa! that's a popping candle. Nice candle, actually. So we're making equal highs. See if we can't break through that. See what the Magnificent Seven is doing. Yep, everything looks green. Might be by a little, but it's green. Tesla's up. All right, higher highs. It's like, how high is it going to go? Well, put a fib on here. The next pivot point, right? Pivot point to pivot point. I always look at that. Not that it trades that way, but that's kind of what I look at. They're trying to sell it right here, though. I'm gonna look for a put. Just load up a put. Back to my charts. That is a sell candle, right? A shooting star is red. What is it? A fake out? That's what I'm trying to determine. Because one of my signals is saying it still wants to go up higher. Hey, just so you guys know, tomorrow I won't be in here. Got take the cats to the doctor. They need to go get their checkups. No, though I'm not an animal lover. My wife would always say, "Oh man, the only reason why you don't like animals is because on Guam, you guys eat your animals." Said only if it's like chickens and ducks. That's that's the only thing we don't eat cats. but uh, but yeah, every time I deployed, I'd come home and there'd be another animal in the house, whether it was a dog or a cat. And my wife and daughter and son they love their animals. So every time I come back, they were like, "Guess what?" I go, "Yeah, you got another animal." Yep. So yeah, we're gonna actually take them to the vet tomorrow morning, and so I won't be around. Probably come back and do some trading though, but I won't go live. I'll just do some trading on my own. But I will be back on Friday at least, and then the next week we're looking at taking a little vacation, kind of go do some things. I'm gonna take that off. Fib ain't helping me. We know that target one is the pivot point if it can break and get there. So now you see this was a good sell signal, but yeah, they're holding it right here, holding it hostage, uh, giving people the chance to place their bets, whether it's going to go down or continue to go higher. As you can see, I put I put in some puts, so you see what I was thinking. All right, just make another high there. All right, one tick. Yeah, so it's not ready to go down quite yet. There's one, two, three. You would think you get a red candle next. Remember, target one was the pivot point. We do have this gap here. Needs to be filled. That's just that he's high. But they are buying it. Although Apple's not doing anything. Yeah, it's up 4 points, but still. That's because I have it on the day. Now I'm looking at it now. Yeah, no, it's moving. It's moving. It's moving nicely. Doing the same thing that spine cubes are doing. And both SPY Qs look to be doing about the same thing. Dow is probably faring a little better. And it looks like we're hitting the first target there on SPY. So here where the trend was, looked like it was lower, right? It was coming down to close this gap, but it didn't. It didn't quite close the gap. Market likes to do that sometimes, knowing that it'll be back. I'll be back. Golf is in season. I hear you, brother. Yeah. Wow. Yeah. Nice weather. Yeah. It's really blowing here. It was really blowing here yesterday. That wind was so blowed so hard last night that my truck alarm went off. Right. I was like, the hell is that? All the neighbors came out of the house, which is good, right? Everybody heard the car alarm. Everybody came out. They didn't come out with their guns, but they came out. I'm like, hey, I think it was the wind for some reason that set off that alarm was, and the dust. Man, that dust is really bad. I don't know if it's Texas dust or where that dust is coming from, but man, that thing was just caking on the car. That's worse than the pollen. Worse than the pollen. All right, we're at target one. See what it does here. Maybe come back test. All right, this level or back test VWAP. Break and retest. Continue higher, or at least continue up to make another equal high in the sequence of things. Hey, good morning, Rob. How you doing, brother? West Texas dust. Yeah, West Texas dust. That thing is terrible. You know, when I see that all over the car like it is, and it was thick, it's like, man, we're breathing that stuff in. It can't be good for my lungs. Cannot be good for the lungs. One, two, three. So you see how those pivots work, man. The math behind it just makes sense. Sometimes you can look back and see where those pivots are based on what previously took place this week. And yeah, they're if you were creating levels, yeah, they're right at certain levels that you would put or that you would create. But it's kind of why I chose to have them on there because you can see that it held this pivot, and you can see that it held that pivot, and it was the target one on a fib. Not to say that it's a major level, but it is a level. Usually pauses here. It paused 1, 2, 3. Come back. Maybe it's retesting it. Not sure. But we'll see if we get further or uh, continuation back down after this green candle. Got to have a trick candle in there somewhere. All right, making equal highs there. See if it wants to go up anymore. Oh, excuse me. That coffee was good. So good and made me cough. All right, market. I would think we'd go up a little more. One more set of higher highs right at the 565. To redraw that. I usually don't trade off of trend lines, right? It's just there to help my eyes realize what the market's doing, the direction it's moving in, which is why a lot of people ask me why I don't fill in my green candles. And the reason why I don't fill it in is uh, that's like a bright green for me. It's too bright on my eyes. So I just leave it open like that. It's does a lot better for me. But to each his own. Yeah, it's a week three greens. There you go. Higher high, right into this 565. That's the yesterday's highs. Trying to push it more. There you go. We're making higher highs than yesterday. Let's see if they can hold it up there. All right, that looked like a good setup. Does that look like it wants to turn around, come down now? You won't know until you know, as David would say. You don't know if you're wrong until you're wrong. Right now, you're right. Still buyers there. Look, they're buying that up. See, that makes a higher high or not. Yeah. I always say you break one pivot point, on to the next. Don't know if it'll get there, but kind of what I look. You got this gap right here. Maybe it's going to keep trending up. So you start to think, is that setting you up for the Fed meeting or the Fed news release, the Fed Powell's speech? Take it up higher so that bigger people can short it, buy puts, knowing that it's going to come down or something. I don't know. That was a good leg right here. If anybody caught that long, congratulations. Funny how the market plays with your mind. Like just looking at pre-market, I kind of thought if we're going to open up the top of this channel, we're going to come back down, close the gap, come back to the bottom of the channel, and just trend in this channel all day. Probably a lot of people were thinking that. And so what does the market do? Pretend like it was going to go down, and then boom, does this move, catches people off guard. They go, okay, well, they're gonna sell right here. Yeah, it's gonna come down right here. Nope. Everybody that was getting short here got their stops up here. Boom, they hit it. And people switch to being long, and that's when the market will start to come down. once uh once you get everybody long. Let's see what the analysis is saying. Yeah, there's more calls. There are more calls than puts. Yeah, I hear you, George. Yeah, you watched it again. Yeah, you know what? We're good at that, right? We're good at watching it and like, oh man, I should have got in. But that's how you learn. You look back and you're like, so what was the actionable signals? Well, probably right here, it wouldn't go back down. You would have thought that this would have brought the market back down some, but it didn't. And so it was just waiting. And so I looked, I was like, okay, can't go back down. Right? They're pushing it up. I said, up. I have one signal saying it's going to go higher, but I don't trust it. And then what does it do? Goes higher. Or you get these three that come back. A lot of people like to buy this, right? Comes back, breaks higher. Now we're at that same point where now let's just draw these like this. So if it's going to go higher, then it's probably going to break that. Although I wasn't looking for the market to go any much higher, but we might come here make a equal high before it comes back down the other side. Maybe, sorta. Break, retest that pivot. Was resistance, resistance. Now it's support. Yep. It's trying to get up there again. Market. Always like to see it make a equal high. So that kind of like tells you, okay, this is it. But I would think the market's going to be just slow today like this until that 2 o'clock hour. That's when all the fun begins. All right, so we pulled back to the 50% retracement. So looks like we might come up here and make our equal high. We'll see if the market wants to continue moving higher. Close this gap at that point. We could do that. It's like we're up here already. Why not? Why not close the gap? All right, man, George. Good luck on your golfing game. Hopefully, you make a hole in one. I think that's what they say. I'm not a golfer, but all right, market. Up or down? All right, man. See you Friday. See you tomorrow. Oh, not tomorrow. See you on Friday. Tomorrow's Thursday. You know, retirement, you forget your days. I'm gonna look back here at my still more calls, but the puts are quickly heating up. 568. That's a nice candle. You could see the buyer stepped in. Just a matter of you get follow through. It's almost like it's making you think it's gonna go down, trap you. All right, we're back at the 50% there. See, it kept doing that, right? Comes back 50%, 50%. Now we're back to 50%. 618 is the pivot point. If it breaks that, we're going to VWAP. All right, we're at the bottom of the first hour. We're at the pivot point, 612. This breaks. We think we're going to VWAP. I was still looking for a equal high. I didn't get it. Fooled me there. That's a sale candle. Well, no follow through yet. There you go. All right, market. You gonna keep with this trend? I think we do break the pivot and come down at least to VWAP. That would make sense. Struggling. Can't break that 618, at least not yet. It's on support again. There we go. Yeah, that's fake out. They're trying to sell it, but if the bulls wanted to, they take this thing right back up to the highs. Like it's just teasing people. There it comes. Just a matter of time. Hitting VWAP like we thought we would. Yep, everything's still green. All right, that's a good reversal candle. See if we get it. Yeah, if it breaks through here, it's target one, right at the lows here. So probably right at the green in between this zone, 563. Trying to hold VWAP. Hey, morning there. GBC J Los Angeles custom sign. You short again? I know you were a bear yesterday. Yes, sir. I hear you. Looking for that flush. Yeah. Or at least return back to the channel. Let me look at this. I take it from this low. Oops. That low. That high. There's the 50. There's the 618, which is right at our target one as well. You're playing TQQQ. Yep. Gotcha. So this is what he's playing, which is almost the same thing, right? Same same pattern. Right at VWAP. I do one of these. Yeah. We get down. Yep, runs the same. But you're not buying options, are you? You're buying, shares? All options. Okay. Cool, cool. It's another way to play the market. Now the TQQQ, is that, ultra long? Is that long the Qs? That's not short the Qs, is it? They're selling it right here. Yeah, it's long. Yep. Gotcha. Guys, I'll be right back. All right, that's a good move down. Yeah, I hear you. I hear you there. Custom signs. Well, you got the you got the Fed meeting today. We could be a whole bunch lower by then. So here we're right at VWAP, right? Making equal lows, right? At the 50% retracement. Yeah, yeah, and he could do that too. Well, no, I don't think he'll say anything bad, right? So he's going to be political. Yeah, he'll be political. I mean, they won't do nothing. He'll say the data's there and it's looking better, and we'll see what happens next time we meet. But you know how the reporters are; they'll chop up what he says and the words he uses. Then you never know. He knows what Trump wants. He knows what Trump wants, and so he could easily say, "Yep, we're lowering." You want to make Trump happy? We're going to lower because if he doesn't lower, he's going to get that text, all right, or that tweet, whether it's on X or his social truth platform. Call him a knucklehead. Yep. But yeah, I think he could take criticism. He's okay with that. Like, call me a knucklehead if you want. Yeah. Yep. Exactly. I think he just says, "Well, you know what? Just let's not argue about firing me." 'Cause said, "No, you can't fire me," but he don't wanna do that battle. Yeah, I hear you. I hear you. Well, although it looks like the market's prone to go higher, but you never know in our market. Yeah, yeah, it looked like that's what it was gonna do, right? When I looked at the pre-market. I thought it would at least close this gap, if not going lower. But you might get there before the end of the day. That's for sure. Now, the options that you're trading are they Friday's expiration? Because it doesn't have weeklies, does it? Yeah, I hear you. All right. I'll be right back. I'm back. Just went and made me some toast. Haven't had no breakfast. Usually don't eat no breakfast. Usually I just have some toast or something. Keep me going the rest of the day. So we came back 50%, right in the middle, 618, double bottom. That was an actionable signal. Follow through. So you could take it up to here, down to here. You'd say we're right at the 618. Maybe we'll break through. Still fighting that 618. Look like they're selling it a little bit. See if VWAP's going to be support. VWAP's right at the 618. Yep, breaking right through it. uh, they sucked it back up. Tricked you. Break VWAP, back test. Nope, that wasn't a back test. That's a good candle there. They would both lose your money. Hey, you know what? Yeah, yeah. Yesterday it caught me. It chopped me up yesterday. That it did. Thing in these markets, sometimes you got to take your profits earlier, sooner than what you normally do. That's funny, David. One of the reasons why I haven't made a trade yet. Not confident in my bias. Trying to read the market is hard. Like this to me is a that's a sell candle. As long as you get follow through. But it looks like today you're not getting follow through on those candles. But when I see a candle like that, right on this line, but you got VWAP down here acting as somewhat support. So if you did buy a put, yeah, you're only looking like this, right? This is the real estate you're looking at. Which just means you got to get a really good positioning. XRP is now free to run. Yeah. See this one guy on YouTube that's always doing these XRPs videos. Never really look at it. But he gets a whole lot of views. A whole lot of views. Like that's what I should do. I should just do a video on Bitcoin. They'll come and look at the video the first maybe 1 minute and they'll leave. They go, this guy don't know what he's talking about. Get out of here. Okay, so that's a good candle. Very little pullback. Remember what I said? You got the pivot point here, then you got VWAP here. So it'd be hard for me to take this to the downside, knowing that that could be support. That could be support. I need to get at least 50 cents. So my entry's got to be perfect almost. And with the slippage in Thinkorswim, yeah, it wouldn't be that great. Run, run, run. You own some? What's the are you your XRP? Is that the ticker as well? XRP Army. Another candle where they're trying to sell right here. They're selling it. Some sellers jumped in. They can easily be absorbed just like that. Now remove this. It's not helping me anymore. Yeah, it's hard to trade this market right now. I rather hold and wait for the meeting to take place. you think about it, we're actually yeah, I'm scared. Um, we're actually if you look at a day chart, so you look at a day chart and you go, "Man, we've come back so far." That's the weekly, right? The weekly low. Weekly so if you look at it, then, we're putting in a higher high for the day. Um, but if you think about it, we pulled back so far that I think whatever whatever the, FOMC committee says should be enough to feel a push up, push high, push upwards, not high, but push upwards because we're so far down. Whether it's and they're not going to be the verbiage is going to be in line with the thought of yeah, things are getting better. We've seen the inflation numbers; they're ticking down, very little, but they're ticking down. Your gas and your egg prices are coming down, so um, that's looking good. So I can't see how they would say anything or whatever they say would push this market even further down. I don't think they want to do that. I think they want the market to go back up higher, right? So I think whatever they do or whatever they say, it's going to be conducive with the market going up, which is why we kind of see the market coming up today, right? So you look at it, it's like, okay, is this an implication of what's to come once they announce they have the press briefings that the market's going to continue to climb higher? And a lot of people are positioning themselves for that. Now they could get surprised, right? They could get surprised, but it seemed like the path of least resistance is higher than lower because we're already so low. It's just me thinking. I don't know. Not sure. Won't place the bet on it. I will not place a bet on it because I'm never right. I'm more wrong than right. I get lucky every now and then. But we'll see. We'll see what the market wants to do right here, right? So we're coming up to equal highs. So do we push? Do we push through, or do we slowly turn around? And doesn't look like this market's moving very quick. Although I'm willing to try a put here, thinking that it will come back down. But this is yesterday's highs, right? This yellow line, yesterday's high. So anytime we go above it, you're talking about the market making higher highs on the day, which is somewhat positive, although very little, very, very little. 5,500 to 5,700. You see that? Yeah, it's holding just above the yesterday's highs. And I guess you could make a case for either which way you think the market's going to break after the announcement. I don't have no dog in this fight right now. So I usually don't trade right before and get into a position hoping that I'm right. And a lot of times I like to wait until after the market comes down. But if I see a trade, I try to get into it. All right, so I couldn't make higher highs. That's always a problem. I say a problem, but if you're looking for a pullback, that's a good indication. Can't do a higher high. And then pull back at least to 50%, which is that pivot point. Yeah, that's one to break the yesterday's highs. Using it as support, consolidate, take a breather, drink some water, get ready for that next move. But look at this all the way up, chop, 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 chop. Man, just chopping. A lot of uh, people taking, what do you call it? Scalps. That's what it's called. Scalps. A lot of lot of scalping happening here. Comes up, take your profit, profit. Comes up, take your profit, profit, profit. Comes up, take your profit. That's a nice breakthrough. All right, making higher highs now. Huh. Yeah, maybe we're gonna close this gap here. I'll save you. Break one set of pivots and come to the next. There's more gaps higher. Still more puts than calls. So is this a a back test of this level? Previous highs? Coming up to the 12 o'clock hour. Yeah, I've been in or had puts loaded up. I'm going to switch over to calls because it doesn't look like this market wants to pull back. All right, let's see if this is going to hold, break, retest, or maybe even come all the way back to the highs. Either or. But I'll probably try a call right around there, depending on where it goes. I can see it come all the way back to here, all the way back to the yesterday's highs. That'd be a good place to get a call. That's the new high. It'll look like it's going to come down some more. I'm just watching it. See if you get a third candle going up. You see they're selling it there. That's why I didn't take that. Yes, I'm still just waiting for it to come down. I am out of coffee, so I gotta go pour me some more. We're right back. Don't let the market do anything. All right. Yep. Market didn't do anything. Figured it wouldn't. Uh, Market just be trading some strange patterns today. Nothing that nothing that is tradable for me. Not yet. That's me tearing up mail. Got to be what you call it. Got to be able to do more than one thing as I'm waiting for the market to get my setup. Here's what I'm reading. Uh, uh, Pensions and investments. So coming up to make an equal high. Just looking for it to pull back a little higher than this to get into this. What else the market does, makes you chase. Here's the 30-minute. It's not one I want to mess with. This one. There we go. I just adjusted that gap. All right, there's definitely a rejection there. Too bad I have puts loaded up. That's a clear rejection. So I'm going to switch to puts now. Let me see what I want. Let's look at these. Switch to puts because if this is the double high. If this is going to be the high for today, then we're going to do a bunch of this on this side of the run up. Now its job is to come up here and make higher highs if it's going to keep going up, and or it's going to make a lower high than this. If it makes a lower high, I'll take a put. Because it couldn't get any higher. That's my first signal. Second signal is it's going to make another lower high. Let's see if it can do that, though. This market is giving you all kind of different different signals, so gotta be focused. Entry has to be good if you're gonna hit your a sell order once you get into a trade. I removed that. That's not helping. This ain't helping. Just come up to here, tag that. Yeah, it's just not giving me my setup yet. Usually you get that one more try. Maybe we'll bounce from here and we'll try that. Just not getting any of my setups. See how they give you the candles that make you think they're gonna buy? They're gonna go up, no follow through. Then the next candle, they'll take it higher. That's a good back scratcher. All right, we're at yesterday's highs there. I was looking for that, on this move. We got to come all the way back down and then bounce. That'd been nicer. I would have caught the calls going that way. Now you can kind of see what pattern it's making. If this is going to go back up, which it could. So I'm going to switch again. Uh, Switch my bias again. Unless that breaks. Unless the yesterday's highs breaks. Unless this breaks. If it breaks, coming down to target 2, which is the pivot, and VWAP. That's most likely. But this could easily come right back up here again. Remove that because I don't need that anymore. So if this comes down and tags this again, make it equal low, and starts heading back north, I'll try a put. I mean, I'll try a call, and I'll put my sell order beneath this. So hopefully this will be a barrier or a well, well, see if that wants to hold. I gotta wait to the second half of this candle, which is now. So I'll try. Yeah, I got it. I like where my stop loss is 0.25. Ugh. See if it's gonna act as support there. If it breaks it, I'll just move my stop up, out, or move my stop up and just get out if it's wrong, right? So the way I trade, if I'm looking for this to be, you can see them buying it up. This to be the support, and if it's not support, if it breaks through, I might as well get out right away. No need to wait, because then my trade's not working like I intended it to. Although my sell stop is at 0.25, so I lose between 25 or $30 depending on how quick it moves down. And you know what? If it does move, I mean, it's a choppy market, so it moves up to the 618. I'll take whatever's there. That's just $20. I'm good with $20. I'm going to move my stop up just a little bit. Yeah, see that candle? That's not a good candle. Ugh, I don't like that guy. 382, and that's a hard candle coming down. See if they bid this back up again. That kind of fooled you. 1, 2, and then it took it all back. Let's see what this next candle does. That's not good. Yeah. Yep, Duvall, I agree with you. Coming up to the 12:30 hour. I like this thing to hit my cell before 12:30. Another 2 minutes. Can you get up there? Can you just push it up? Come on, Margaret. Where are them buyers? Where's the volume? Where is the volume? There you go. It's a little. I'm going to move up my stop limit so if it comes back, I can get out of this. Come on, come on. Push it higher. Push it higher. Trying to get that 618. Might not get it, but if it stopped me out, I get stopped out with profits. So I can always re-enter the trade. And we're at the 12:30 hour. Yeah. So it did knock me out. How you gonna come back and get one contract? Whoops. Yeah, a couple of dollars there. Remember, I'm only trading one contract. And my goal is not to lose. So if I move my stop up and I just stop out with profits, I'm good. I could buy a taco meal with that. Because I can re-enter this trade again. Oops. Almost spilled some coffee. A little hot. All right. We're back on support. I'm hoping. Yeah. See if this is going to be support again. Looks like it wants to break it though. You figure anybody that's buying here has their stops like I did down here. So there might be a tendency to break through like it did, hit some stops, and then turn around. As long as I don't get follow through. Okay, there you go. See what this candle does. Looking for a little red candle after this. See if I get it or if it will get a green. Another 15 seconds. See, that one's turning red. Okay. It's after my 30-second wait. And this is like a fake out, right? That's going to go higher. And it comes lower. Just like that. The whole reason I waited. But we'll see if this can still hold. Giving everybody a chance to place your bets. Are we going to go higher or are we going to go lower? Might trade this way for a little bit, like it did here, until it decides what it wants to do. They're selling that. Sold that right back down. Looks like it's going to go down. So the 15-minute making lower lows. They're selling it. Yeah, I'm just watching this. Got calls loaded up, but I'm not 100% sure. Yeah, I agree with you. People are going to start getting. These are probably all the people that wanted to get out, right? Up the top. Let me get out before the Fed meeting, before they announce. Now we're consolidating. Well, we should pull right back up here, though. That's what I think, if not higher. But this continues to break the highs. Either that, or they just keep trying to get some what you call it stops. No, it's at 2 o'clock today. 2 o'clock New York time. It's 2 o'clock. They announce, and then I think it's 2:30. Powell come out and give his speech, and then answer some questions. I think it's going to be enough. He's going to say enough. The verbiage is going to be enough to pull the market up some. And again, we're the market's at low lows, right? Are already there. Not to say that it can't go lower, but I don't think Powell wants the market lower. I know he doesn't want to pull the market lower and then get beat up by Donald Trump. But I do think calls are probably the vehicle that I want to be in. Still got a little while, so the market's gonna move a little here and there between now and then. But usually after 12 o'clock, it starts trading sideways, like it's doing. It's just trading sideways. The thing is once they announce and they say whatever they're going to say, uh, and the market moves so fast that you get in and it'll hit your stop real quick because it'll chop. I'd rather just wait until he starts to speak and it calms down a little bit. Try to find a position then. because if I bought some calls, I would have to not have a stop on it, just because I would think that in the end that it would go up. But I don't know that. Don't know what it's going to do. I like to catch a move back up to the 618 here before all that happens. Kind of what I'm looking for. I'm just waiting for a actionable signal, something that tells me to get in. Maybe at the 1 o'clock hour. It's about 10 minutes. And I always find that time has something to do with the market, that certain times when the market moves. Yeah, that's not a good candle. Not a good candle at all. Not if you're looking for the market to go up. If you're in puts, that's a good candle. That's a good sign. You look at it, so it was support, 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 broke through a little, right? Support keeps breaking through, going lower, 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 lower. Just keeps breaking lower. I don't know if that's to hit more stops or is it just to get some bears to come in and buy the downside so it could pull up. There's VWAP's right there. Another 7 minutes before we hit the top of the hour. All right, I'll try one if I can get it. There you go. Let's see if this can take off a little bit now. Come on. I see a little juice. But I'll be okay to take my profits early, like right there. Maybe a little higher. See if it can't get up there. If it could break this green line, this green level, I will move my stop up to it. Let's see, we can't even get 3 greens. It doesn't seem like the idea of this moving up is strong yet. Come on, get up there. Get up there. Little red, little red, little red. No, not big red, little red. All right, come on. This is the second half of that 1 minute. And see if there's still some more steam to take this a little higher. I can see some. I can see some potential. See a little push. Come on, little push higher. No, not lower, higher. It just keeps chopping you up. I should already brought my stop loss up to under here. Stop out with profits. Nothing wrong with that. Yeah, see, we're right back where we were. Broke through the highs. It's gonna come get me now. Look at that. Yeah, yeah. I should have known better. Should have moved my stop up. That's what I got to do. You got to lock in whatever little profits you can get from this market. So what do? You reload and you try again. But you see how I said it just keeps getting lower, 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 lower. Just keeps moving down. Which was my only worry. I thought it would go up a little bit higher. Get that 618. So that's 2 trades. One was good, one was bad. Let's see what the next one brings. Now my bias is to the upside. Like where does the market want to be when it announces? That's a good question. Here we go again. High, lower high, lower high, higher high, lower high. So what does this become? Oops. It's just sucking in retailers, taking your money, taking our money, taking my money. And let's see if we get follow through after this candle. If we do, I'll try again. No, chop, chop, chop. See, make it more lower lows, all the way down to VWAP. Maybe VWAP will be the support. That should be good support because it's on a pivot point as well. Come down here. Come on down. Wow. Gotcha. All right, just be safe, David. About I think a week ago, 2 weeks ago, we were laying in bed about 4 o'clock in the morning, and the sirens went off, and my wife woke me up and said, "Hey, the tornado sirens are going off." I'm like, "Oh no." We looked at each other and said, "Well, if it's our time, we're ready." we, knew- we ain't getting out of bed. I know that's a mistake a lot of people make, but it is what it is. All right, so now is this the break and retest? Yeah, yeah, David, yeah. Yeah, we did. We just laid there and looked at each other and said, "Well, I'm not running to my safe place. If it hits us, no, the thing will just fall on us. It's okay. We're ready. We're ready to go see Jesus." Mm. All right, right on BWAP. Let's see if VWAP can become resistance. No, looks like they're trying to break right through it. Anytime it slices through it like that, it's like, yeah, there's no resistance there. Unless they buy it up like they're doing. Another 20 seconds. Now, although this is a good candle, these candles have been fake outs majority of the day. So let's see if we get follow through. See, initially you don't get that follow through that you need. It's one of these. Buy it up, come lower. Buy it up, come lower. Buy it up. Are we going to come lower now? Or are we going to turn? Look like it's going to turn a little bit. It looks that way until it doesn't look that way. Yeah, definitely pulling back. Look at that long wick. That might be the next place it goes to. I know if it breaks one pivot, I always say it's going to go to the next pivot. Although we know that's not always true. That's just for planning purposes. That's what I think. Obviously, it broke this pivot and it didn't make it to this pivot up here. Yeah, so it doesn't always happen. Just what I think. I don't trade off of it. $54.50. SPY is 544. I mean, if it breaks 544, 'Yep, I'll tell you 100%. I'm mostly wrong. I am mostly wrong. That's why I tell people never follow my recommendation to get in a stock. You want to see me trade? You can watch me trade. You watch me lose money. I'm not here to give advice to anybody or a recommendation to buy or sell anything. I'm just here to let you watch me. I don't charge anything for anybody to watch me trade. I don't ask nothing from you if you want to watch me trade. I'm not a great trader. That's for sure. So Villa, you're right. You're 100% right. Yeah, well, YouTube is all about entertainment, right? I think most people that come here already know how to trade. When I'm just speaking what's in my mind, does it play out? No. Sometimes it does. Sometimes it doesn't. Yeah, nobody. Well, we would like to think nobody knows. Yeah, everybody has their own trading style, right? Everybody plays their own trading plan. I hope nobody comes to the internet to do what somebody you don't even know tells you to do. And I ain't telling nobody to do anything. I'm just saying this is how I trade. And trading is 50-50, right? I think somebody in here was saying that the market was going to go higher earlier. I kept telling me to get into a call because it's going to go higher. That obviously it's not going higher, it's going lower. We all have our own opinions and our own beliefs, our own bias. Yeah, no problem, not a problem. And it creates a bias. Yeah, well, you know what? If you're not listening to me, you're listening to your own mind, and your mind is creating a bias as well, right? Your mind is telling you things. Your mind is saying, well, okay, this might be a good place to buy. This might be a good place to sell. Yeah, yeah, yeah. I hear what you're saying. Yeah, we all have we all have losing. If you know what, if we were making millions of dollars or even thousands of dollars, we wouldn't be here. We'd be somewhere else. Again, I'm not giving advice. I'm just showing people how I trade. Right. That's why I trade just one contract majority of the time, so that if I lose, I only lose $25 or more. I don't lose a ton of money. If I win, then it's $50. So I have a greater chance of making money than losing. Oh, no, 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 no. That's perfect time that you said that because, uh, one of the things that I always worry about doing this is that people are going to try to follow me into a trade, and I don't want people to follow me into trade because I know for me it's a 50-50. Sometimes it's a 40-60 chance of winning. And so that's why I say, hey, don't follow me into trade. Don't believe whatever I'm saying, because mostly I'm wrong. And I think I say that majority of the time when I'm on the stream. Don't take anything I say as a recommendation or advice, because I am not the right person to give that. I always tell people I don't have a certifications or a degree. My degree's in human resource management. It can help you get a job, can't help you trade. It's hard. It's difficult to trade. If I wasn't doing a live stream, I'd be talking to myself in my mind, the same thing, right? Okay, here's a double top. I like to trade the double top. I should have got in there. I didn't. And again, like you said, that's on me. The harder it gets. Yeah. Yeah. You're right. If you play longer term, you give yourself more space, but also take greater risks because you're waiting for something to play out longer time. So if you got the capital to do that, so now we're coming back down. We're hitting this one place, this one level. I said it might come to. Maybe it pauses here. Maybe it keeps moving down lower. Yeah, coming to that next level. Yeah, I think trading, and I've been trading for a while. Trading is hard. if, if you're going to quit your day job and become a full-time trader, thinking you're going to make a living, that's very difficult. I know some people on the internet claim they do that, but I don't know. I just do this in my retirement life. That's a totally different thing. I don't have to depend on the money I make here on trading to live. This is all my retirement account, not my spending account. But yeah, I'm looking at the day, just the pattern. I do not know what to make of it. Look, it wants to come all the way down, back down to the this pivot point where they found support. Little bump. All right, so the 618 is right there. Pivot point, VWAP. Look like the perfect spot to reverse if they can get that high. Yeah, well, who's the one guy? You? Who's the one guy, Nick? I'll go check him out. That's if he has a channel. I hear you. And that's why I usually just trade, one contract. I'm not looking to make a million, and I sure don't want to lose a million. If I make $50, I'm happy. If I lose 25, I'm okay. I could bear that. When I take one too many trades, uh, they kind of add up, and you try to revenge trade. Yeah, never works out well. All right, coming down to the bottom of the hour. All right, let's see if it's going to make a equal low here. Kind of see as that like the market pulled up as we're getting closer to that 2 o'clock hour, it's selling off. So if you remember when we were up here, I switched from calls to puts, and it trades sideways, consolidating, followed the trend, came down. Now what's the next move? There's a double. John Crisco. I'll have to check him out. If this comes back and touches the 563.25, I'll try a call only because threes are kind of my setup. So that's why I buy it. As long as it holds here, that's why I buy it. That's part of my trading patterns that I look for. Okay, let's see if this is gonna hold. All right, doesn't look like it wants to hold. Looks like it wants to break through. We'll see if they buy it back up and I get follow through. So obviously it didn't hold, right? My pattern is that it bounces from here, or if it comes down, they buy it up, turns green, and I get follow through. That didn't happen, and that's why I didn't buy in. It's not going to bounce and go up. Yeah, maybe it goes down. That's a good move back up. Yeah, Nick, I checked out his channel and subscribed. I'll take a look at it tonight. Looks interesting though. I could definitely use all the help I can get. Meanwhile, the market is moving up. Yeah, that's all green. That is all green moving up. Where's it likely to go? Well, there's a VWAP, there's a pivot. Although I was looking to get in here, right? I said there's the triple because it broke. I didn't. But look what it did. It's usually what you get on a triple, but it didn't hold. So I'm saying the market like funky today. I would think it would at least pause right here. Or at the 50% retracement. about 20 more minutes. So I wouldn't be surprised if this pulled back, come back up here. Remember that same old setup, right? Equal highs at VWAP. I think the last two times we played it to the downside and it was good. But the previous ones were to the upside, previous to the last two. So it turns around to be almost like a 50-50. You really don't know. You got to look for them signs. Or this could just break right through. 618 is right up top. Those are two like sale sale candles, but they're not working today. Or as they say, it doesn't work until it works. And I still have calls loaded up. Wow, it's coming back. It's coming back hard. All right, we pulled back to the 618. This is where I always look for a reversal. If it breaks the 618, then I say it's coming back to the 100% retracement. Another 15 minutes before they announce. And what I'll probably do is I'll turn CNBC on, although there's a delay there. I'm not looking to trade off of the news. I'm just looking to listen in, see what he has to say. I don't think he's going to say anything brilliant. Uh, about just listening and watch the charts and trade the charts. Wow, look at that. It's coming all the way down. So that's that first target. If it does break this,
right? So they have interesting technology. They command their own fabs. They have a unique advantage compared to companies like AMD, Qualcomm.
so it looks like Amazon's down, Meta's down. Two of them that are down. All right, look like they're trying to bid this higher now.
Welcome back. Jensen Huang unveiling his vision for physical AI at NVIDIA's GTC event, signaling that we might get helpful AI-powered robots in our lives sooner than we think. Deirdre Bosa brings us more in Tech Check. Deirdre?
Hey, Kelly. So physical AI was a big theme this week, and it's really the ultimate end market and test of AI's real-world impact. That's why it matters.
That's a nice candle.
Humanoid robots, warehouse automation. It also opens up.
See if they get follow through.
Between the U.S. and China, with potentially far bigger implications, and that was really on display this week at GTC. Jensen Huang's enthusiasm about the potential in robotics, contrasting with China's lead in making cheap, functional robots in smart factories. Blue, the robot droid that was brought out on stage, it was cute and it certainly stole the show in a way, but it didn't actually do much other than follow directions. Compare that to the humanoid agent robots from Chinese startup Unitree that can do side flips and kung fu. Those robots, they're already commercialized, more affordable and accessible than the ones that Jensen Huang choose to, and even the ones that are still in development at Tesla or Boston Dynamics. Here in the US, NVIDIA, Jensen Huang, they've really just only begun introducing physical AI in earnest to a wider audience. First at CES earlier this year, now at GTC this week, focusing more on the underlying technologies. I hosted a panel at GTC yesterday on this very topic, and I asked my panelists what might be the ChatGPT moment for physical AI.
All right, we hit the 50 and it's just retracing.
Company Intrinsic, she suggested a scenario where a humanoid robot builds an IKEA bookshelf as a kind of breakthrough that would signal physical AI's readiness for the real world. And that, Kelly, would be a task that requires adapting to unstructured environments, handling uncertainty, executing complex multi-step tasks, all without human intervention. Feels simple unless you've ever put together an IKEA cabinet.
Simple. If the robot can put together an IKEA cabinet, this is why I'm so excited for the AGI or physical AI or whatever we're calling it. That I think in the next 10 years, a robot will be putting away our dishes.
By the way, I asked all the panelists, I think there were 6 of them on stage with me from different layers of the physical AI stack. They all agreed that within 10 years, we would have humanoid robots in homes and offices.
Yeah, and then when it drops the dish and breaks it, I'm going to say to it, well, you know where the broom is? You know where the vacuum? You probably are a vacuum.
Exactly.
Oh my gosh, I can't wait. Deirdre, thank you for now. We appreciate it. Deirdre Bosa. No idea what the price tag, of course, would be on these. Got to wait for it to come down a little bit for the masses. And for Jim's full interview with Jensen Huang, tune into Mad Money tonight at 6 p.m. Eastern. You hear a whole lot more about physical AI. That's it for us. Thank you for watching The Exchange. Less than 10 minutes away from the Fed decision, and Our Lunch will pick up that coverage. Brian Sullivan is back, and we'll see you right after this break.
So obviously you got a delay in CNBC, right? So the market will move in about 7 minutes, and it'll do its thing, and then CNBC will come on and kind of explain the news, whatever you want to call it, the news briefing from him, the talking points. Yeah. I believe you, David. Yeah, there you go. What do they still play that? The Jeffersons? You see that now and then? I don't watch them. I don't got kids, so we don't watch Cartoon Network or anything like that. When we're at my granddaughter's house, it's always like Coco Melon and some other ones. I forget what their names are. Some underwater fishes, and I think there's one lady on there that Mrs. Rachel. Yeah, Miss Rachel. Seemed like a lot of people loved her.
I'm Brian, and we are just about 5 minutes away to the Federal Reserve's decision on interest rates. They are not expected to move on rates. They still could not expect it to. And if you listen to our mock Federal Reserve and those who responded to our poll on X, you all agree.
Yeah, if you're day trading, yes, 1 minute. anything less than 1 minute, right? Man, that thing moves too quick for me.
And the press conference often will move markets quite a bit, and a lot of times to the downside. I don't think a lot of people want to lay bullish bets before we hear from the chair, but that said, markets are moving higher right now. The Dow's up 0.25%, 112, well off session highs. We're up almost 300 earlier. The S&P is up 0.5%. The Nasdaq leading the way today, still up 7.
And if I had the capital to buy shares of SPY or Q, then I would probably hold it for longer. I used to hold it for longer in my long-term portfolio. But if you can buy and sell, then if you're wrong, you could just hold. You don't have to worry about time decay.
Look at Microsoft, and the narrative is that the markets have been falling because of tariffs, and maybe they are. But if you look at a company and said, what company perhaps?
That's why with the scalping, you gotta get in and get out. I'll be right back.
the Fed does see a
Yeah, it's a big bump. That's why I like to
economic growth. However,
wait, because usually it goes one direction, comes back, and then it goes back the other direction. I say usually, but yeah,
They kept the two rate cuts in place for 2025, but the dot plot is a touch more hawkish.
you never
We'll go
know.
over that in just a second. I want to tell you the news on the balance sheet, for which there is some.
Then they'll start doing some moves during the briefing at 2:30.
From 25 billion, they kept the mortgage-backed security runoff at 35 billion. Governor Waller, he dissented, very technical dissent actually. He agreed with the idea of not to change rates, but he did not want to change or reduce the balance sheet runoff on the economy. They say it's expanding at a solid pace. They say unemployment has stabilized, but inflation remains somewhat elevated. And let me give you the hawkish tilt or tilt inside this dot plot here. 4 of the 19 officials wanted no rate cuts, compared to only 1 in the December.
Now, if you were in calls, it would have hit you. You'd be good. Hopefully before it came back.
I don't know what you'd call it, the dovish wing of the committee here, where there were 5 people who were looking for 75 basis points of cut this year. Now there are only 2. So a kind of compression here, leaving the top where it was, and some of the bottom coming up, a little bit more hawkish here, but the median still maintaining a forecast for an outlook, not a promise, but an outlook for 2 rate cuts this year. Guys, back to you.
So, Steve, I can't say, well, look, the market is interpreting this in a somewhat dovish manner. And for me, I'm going right to the balance sheet on this. This is super interesting. And I want to make sure that I kind of explain this clearly and that I understand it clearly. So in essence, the Federal Reserve just decided it's going to sell fewer treasury bonds, right, from its balance sheet. As it's deciding.
Can I grammatically correct you, Kelly?
Well, yes, I'm
Only for
oversimplifying.
technical reasons. I don't want to be rude here.
Yeah.
But I do want to say.
That's a lot of selling in this one candle.
Will allow fewer treasuries to run off of its balance sheet. That is, to run off, mature, and not be replaced. They're not selling. If they were selling, the market would be freaking. But they're letting it run off, so the market's not freaking. Sorry for interrupting.
Well, I guess point being, and maybe one of our guests can step in. David Kelly, I'd be curious for your reaction on this, but if the Fed is slowing the runoff, on the margin, that's I'm looking at bond yields falling right now. Is this welcome news for a treasury market where every little bit that helps in terms of people keeping the treasuries that they have and not reducing their balance sheet more as the Fed's doing here, does that really help on the margin with interest rates if we watch the 10-year moving to the downside?
Well, very marginally. This actually wasn't unexpected. The problem, they've got some multiple areas of uncertainty here, and one of them has to do with the debt ceiling. So they think there's going to be a debt ceiling agreement at some stage over the summer. When that happens, the Treasury is going to bounce up or increase its holdings of the Federal Reserve, which will cut reserves. It brings the idea of a problem in the Treasury market more, or in short-term interest rates more likely, and that's what they've been trying to avoid. They want to be sure that they don't have a repeat of what they had back in 2018, where they let reserves get down too low.
Yes.
Now they see a risk of that in the next few months, and that's why they're just backing off here. They just don't want to reduce that balance sheet too much and end up with a problem. So just try and keep out of the way of trouble here in a very uncertain environment.
And David, I only want to harp on this because Steve just said there were some hawkish elements. So if people are wondering, well, why would that not translate to bond yields going up and so on and so forth? I mean, do you think that these moves on the balance sheet
Yes, tap dancing. Yeah. I mean, it's funny because, what can you say? Inflation is, it's not where it needs to be. Although I think unemployment is going to get worse, right? If they're laying off all these federal workers. But, they got good packages, so it might last 6 months. They can't file for unemployment until that's actually over with because they're still getting paid. Can't be getting a paycheck and getting unemployment at the same time.
Seems to be maybe a bigger deal than the headlines might suggest. I'm saying that because our friend Jeff.
So they probably won't see those numbers for a while. Some of them took a really good severance package.
They simply want their own borrowing benchmark rates, whatever it may be, to come down as well. How do you read this running off, not selling of treasuries?
Yeah, and that's been the case throughout, most of the QC period. Now they're just slowing down the pace of that, which makes sense, right? As David highlighted.
So that was the initial blast, not really a blast, right? So we didn't make higher highs, and we're still trading right there, right at VWAP.
But this is the one difference versus what forecasters had effectively priced in, which was the change in growth, change in inflation, and expectation that they could stay pat on rates at this point, because we don't really know the full effect of policy. April 2nd is going to be a really telling deadline in terms of what
I'm making progress. Yeah.
Sorry, Jim. Let's go.
Yeah.
Quickly through this.
Yep.
People are just joining us here. Oh my gosh, the Federal Reserve, they jump in. Here's, I think, how we're reading this. And again, Steve Leisman, please jump in if any of this is not correct. By the way, markets, they are not moving or moving slightly higher. Maybe on this news, we shall see the Fed sees the economy expanding. Maybe 2 rate cuts seen this year. No real change in the job market the rest of the year. Maybe a slight, I think Steve Leisman said 0.1% drop in the jobless rate so far this year. Inflation, it maybe mildly higher as well. So, Jim, how do you read what the Federal Reserve just did?
I think this is very non-committal. The Fed is kicking the tires on the economy. Look, we have a couple of things in front of us, and I think it's very important to respect the timeline. We've got reciprocal tariffs coming up on April 2nd. We don't really know how that's going to go, but it's in front of us. Then you have first quarter earnings results that are going to come out. CEOs are not going to sing a positive tune about the first quarter, right? You're likely to see some basically some bad news from some of the CEOs, or at least talking that way. The next Fed meeting is May 7th, and I think that tees us up for a rate cut at the June 18th Fed meeting. So essentially, this is the first time the Fed is trying to make a decision as financial conditions are tightening, meaning that credit spreads are widening and the equity market has just gone through a 10% drawdown. So effectively, this is the first time the Fed is trying to decide, as markets are now starting to soften and weaken, what they ought to do. And in the past, you had a stronger equity market, tight credit spreads, and the Fed was trying to convince you that cutting interest rates was the right thing to do. Now, the markets are kind of siding that way, but they're not 100% sure how this is all going to play out. April data, the events of April, I can't underscore this enough, are going to be extremely important, and I think the tone is going to be changed by May 7th at the next meeting.
Steve, we know that the market's first interpretation is often not its final one. Going back as we digest this, what kind of explains to us the hawkish element you see a little bit here in the statement?
So obviously, if it breaks this yellow line, we're making higher highs on the day.
Maybe they have it up right there. Okay, so here's what happened. There's 4 now with no cuts for this year. That had been only, let me double check what I'm saying here, had been only 2, okay? And then if you see there's 2 with 3 cuts, there have been 5 with 3 cuts. So a compression towards the middle. Guys, I want to explain how maybe I look at this whole statement. I don't see the balance sheet as that big a deal. The bond market may get some help from that. To me, this is
markets will go up.
We don't know what's going to happen. They reduced the growth rate pretty sharply. They raised the inflation rate pretty sharply and kept the outlook for rates pretty much unchanged. But more importantly to me is it removed that statement in the from the last statement that said, we think risks are roughly in balance. That's gone. I don't think they know where risks are going to go. And I think what they're doing, I think it was Jim who said it earlier, playing for time is where they're at right now because of the uncertainty. Look, they took this statement that said uncertainty has increased and put it up.
Wow, that's a nice move up here. And look for just a pullback. It's 3-1.
Well, I guess this is great stuff. And I threw both this statement, Kelly, and the last statement into ChatGPT because I want to see what
that's the highs.
filtered out. And basically, Steve Leisman is ChatGPT because the two came to the exact same conclusion.
Sorry.
And Steve doesn't require nearly as much energy.
That's because Powell is good. He knows what to say. There's that death candle.
And I think to waving the white flag point, April 2nd are when these new tariffs are supposed to kick in. They may not. They could kick in before. They could kick in never. They could kick in later. We don't know how much. I'm not saying this statement doesn't matter, but how much do you think the Federal Reserve is like everybody else, just kind of waiting and seeing what this administration does? Because how do they make any real policy moves when we don't actually know what's going to happen?
Exactly. 2 days after the election, Jay Powell said, we don't guess, we don't speculate, and we don't assume. But you can't make monetary policy unless you do one of those things. And so eventually it's going to have to make a monetary policy move one way or the other. But I think it's not just the tariffs. The other part of it that's really important is how does this how does the tax bill...
I'm going to try one here if I get it.
...evolve over the next month or two? If we get one big bill, which involves a lot of fiscal stimulus in 2026, then the Fed's going to look at that and say, why should we deliver monetary ease if on the other side they're stimulating the economy also? And so they want to see that too. So I think it's a bit about tariffs, but it's also a lot to do with how Congress shapes this tax bill for 2026 and what that means.
See if we can't get up there and make
and the Federal Reserve is
higher highs.
signaling greater uncertainty, but they like everybody else just has to wait and see.
All right. Panel, thank you. We'll leave it there for the time being. We appreciate it as the market moves up. Session highs down up 235 points. On that note, let's get down to Mike Santoli at the New York Stock Exchange. Mike, and what's your take?
Yeah, Kelly, I think the reason the market,
Maybe we retest.
will have some measure of comfort with this outlook, to me, is in the raising of the inflation projection, PCE inflation to 2.8, and not reducing the median number of cuts. That to me suggests some level of tolerance for inflation being sticky. They still think policy is somewhat restrictive. They still think that disinflation is the reason that they would be normalizing rates lower from here. And they don't see a reason collectively at this point to change anything. Now, none of those positions is held with high conviction. And I think as everybody's been saying, they're essentially just going to defer to the next several weeks worth of facts and developments before we decide on that. I think it leaves the market in a position of probably rooting for the economy to stay in there. You realize that the Fed ultimately would kick in if we got weakness, but good news on the economy should be good news for the markets because, you're not really wishing for things to erode quickly from here, I don't think, if you want earnings estimates to hold up. Let's go down to Chicago, and a man I just saw in person, by the way, which is great, Rick Santelli. Okay, I need your help, Rick, because I'm very confused. We're starting to see headlines crossing from other news organizations. Financial Times saying Federal Reserve sharply cuts U.S. growth forecast. Okay, maybe, but the first line of their statement is recent indicators suggesting economic activity has continued to expand at a solid pace. I'm trying to figure out where some of these headlines are coming from. Are you seeing something different?
Yeah, most of the people I talk to that are traders or with large institutions, hedge funds, they don't really pay as much attention to these flashes as you're pointing out. As a matter of fact, with all this talk about uncertainty, here's what many people I talk to jokingly say. When we were pre-uncertain times, was the track record of the crystal ball of the Fed and the dot plots very accurate? No, it wasn't accurate pre-uncertainty. I don't suspect it's going to be any more accurate during uncertainty. Here's what many traders are talking about even before any of this happened. Okay, we're talking about any changes more or less, and that really is it, more, less. Okay, and I'll tell you what I mean. Downshift, less growth, but not recessionary. Less labor strength, but not recessionary. Less inflation progress, paying more attention now than they did, and less easy based on just general notions that they're going to remain pretty aloof because they really don't know what to do, and less QT. And all of those things I discussed with many of my sources long before this statement or the Fed meeting. These were from yesterday or the day before. And the reason I bring them up is that I think when we talk about balance sheet, first of all, that was completely built in. And actually, many expected that we wouldn't just get less QT, that we would actually end QT or do more quantitative easing. So I don't see much movement actually from that headline. But I think that when you look at it all together, what you see is exactly as our panel said, a Fed that doesn't want their fingerprints on the check because they don't know what the future is, but they've never known what the future is.
You see that they're selling it here, right? Sell.
Liberation Day on April 2nd, we get no tariffs. But at the keep two things in mind, okay? That is, if the Fed doesn't do as much, short end is going to get sticky, and it has. Right now, twos are hovering right around
1, 2, 3. Expect the red. Expect the green afterwards.
Going to be very disturbed that we're not
Hopefully, take it up there and take me out.
2% target, and most likely, this administration isn't going to make huge progress on deficits. So, you have to summarize. Once again, I think you're going to look for some curve steepening driven by long rates going higher.
Rick, when you say curve steepening, I remember those debates that we had about flattening being a bad thing. So is this moving in a more constructive direction here?
Well, I think it's a more constructive adjustment, in my opinion, because I think long rates divorcing themselves from some of the manipulative forces and being more susceptible to market forces is truly a good thing. And once again, I think that the equity markets now are showing you the true direction. Maybe there's not going to be any Fed put, so to speak, but don't kid yourself. The Fed pays very close attention to equities, and the more volatility they get in equities,
We're telling the truth.
they're going to showcase in their statement.
Yep. Rick, you talk about Rick?
Santelli. Let's welcome in Richard Clarida, the former Fed Vice Chair, Global Economic.
Yeah, I like Rick. Hey, he can get mad sometimes. He can get real angry.
I think there was a lot of focus on would the dots remain unchanged, and so they still show the two cuts, albeit with a little bit more disagreement. I would point out the downshift on the growth projection is basically to the pace of growth the Fed thinks is consistent with trend or potential growth. But yes, they are emphasizing the uncertainty, and I'd expect the chair to say that in a couple of minutes at the press conference. And then finally, I think there was some speculation based on the January minutes that they might end QT entirely today. So essentially, they're saying they're going to cut back the pace of the runoff.
Rick Santelli.
I think a pretty constructive meeting compared to some of the concerns going in.
The market seems to be most happy that despite their upward revision to their core inflation forecast, they upped it by 0.3 because of tariffs, but they didn't change the fact that they still could do 2 cuts, right? So you're kind of getting that's how they're looking past the tariff impact there.
I think you're 100% right. You know, there's been an ongoing debate in the press, online, and I'm sure probably at the Fed about the best way to think about the Trump tariffs, and consistently, what Chris Waller and Chair Powell and others have said, the first instance is to look through that as not inflationary, and I think today's signal from the dots is an indication that that's their baseline. They're going to be attuned and attentive to inflation, and if you look, they indicate that there is upside risk to inflation from this forecast. So I think that also explains some of the change in the language wording.
Hey, you see where the first target is way up there at the higher highs.
And PIMCO's job is not to react to the Fed as much as
they could just bounce from here.
What the Fed, or what more importantly, the bond markets may do. The bond market, as I pointed out at the top of the show, may be saying something different than our friends at the Federal Reserve are, because borrowing costs have actually gone up, not down, even as they're talking about cutting interest rates. Where does PIMCO see borrowing costs 6 months and 1 year from now?
We had a big
never like to see that.
Yields, in the anticipation of the election, and then after the election, the so-called Trump trade. So some of the moving yields really has not been so much about monetary policy as about the fiscal outlook. We've consistently said we think we're going to be a world of a steeper yield curve. I noted that on your conversation a moment ago. The 10-year Treasury yield has really been in a range of between 3.7.
About another 10 minutes, 9 minutes before the his meeting starts, his press conference. I think the algos listen in for a specific word or words. Based on that, it moves. I was hoping to be out of this trade by now, but not on the downside, on the upside. Oh.
And mortgage rates have gone up, not down, since the September 18th Fed rate
So just shorted Apple.
bizarrely spiked by 0.5%, and talked
Yeah.
about inflation being somewhat elevated. That was in September, not now. How much do you trust this Fed, Richard?
Well, I trust the Fed. What I acknowledge, though, is that a lot of things drive Treasury and mortgage yields and mortgage rates. You know, if you look at the pricing and interest rate futures towards the front end of the curve, they do price in those two rate cuts. You know, but a lot of factors. Secretary Bessent himself says, you know, I want 10-year yields to be lower, and that's going to depend on fiscal policy as well. So I think that's the way that I think about it.
Richard Clarida, former Fed Vice Chairman and also Global Economic Advisor at the aforementioned PIMCO. Richard, we always value and appreciate your time. Thank you very much.
Thank you.
All right, folks, we are just moments away from Jay Powell's press conference. Hopefully get more answers to some of the questions that we just brought up. Steve Leisman has made his way into the room as well. We'll get more reaction to the Fed. Stock markets are higher. Bond yields not moving a whole lot. Maybe Jay Powell will change all that. We're going to find out right after this.
Maybe not. Well, that's a pop. All right, break to 618. Come on. We know that that's the 618 right there. I don't need that no more.
Apply. All right, welcome back to Power Lunch. We are just about 5 minutes away from the Federal Reserve's press conference. Jay Powell could start earlier, could start later. You never know. Federal Reserve making no change in interest rates, mildly maybe ticking up its inflation forecast. Still sees 2 Federal Reserve rate cuts ahead. Here's how markets look ahead of the press conference. I know it's been a rough start to the year, but last couple of days, not terrible. Dow Industrials up 229 points, about half of 1%. Kelly, I think the big story as always is technology. The last few weeks, the story has been technology continues to drop. I know Microsoft has been, but right now the NASDAQ catching a nice bid up 194 or 1.11%.
And we don't often see really positive reactions to the Fed, but we're seeing that so far. Let's bring in Freedom Capital Markets Chief Global Strategist Jay Woods. Jay, the chase is on. I don't want to overplay it, but you think the chair is going to spoil the atmosphere here when he starts to talk, or reinforce it?
He's going to add some volatility to this market. Let's see what he says. The one thing that struck me was the unemployment data. They didn't look at that as changing much. Growth went down. So there are going to be a lot of questions. And, usually the first move is the wrong move, and the press conference gets volatile. Watch the last 30 minutes of the day for the true direction of what this market thinks of his comment.
And that said, bond markets, bond yields, whatever you want to say, started moving. But do you think that's because of
Gotcha, Nick.
balance sheet, or do you think that's just the fact that they said, yeah, core inflation is going to go up a little bit this year, but we would still be cutting rates?
Yeah, I think it has more to do with the latter.
There's just a lot of selling right here.
The bonds didn't move.
Sell those wicks. Just need a big player to come in to absorb that and take it up.
As Brian mentioned earlier, mortgage rates go up when we cut 50 basis points, and people are expecting mortgage rates to come down. So it's going to be an interesting press conference. The dot plot to me was key, that there's still 2 cuts till the end of the year. When they start, well, maybe we'll get a better idea after he talks.
But just from, and I think you would agree with this, Jay, and I want all of our viewers and listeners, I know there's a lot of people that are kind of newish to the market because the markets have had such a big run the last couple of years. Crypto's brought some people in.
Took me out there.
Welcome to everybody who may or may not be new out there. The Federal Reserve reserves the right to change its mind based on any data point at any time.
Yep, and you never know what's going to come down the pipe. No one predicted COVID. Look how they had to change to that. I don't want to see them cutting rates because of some unforeseen problem. I want to see them cutting rates for the right reasons, and that would be inflation's under control. The dual mandate has been met. So right now, it seems like things are okay. We still have that tariff uncertainty. The market doesn't like uncertainty, and that's why we've been volatile these last few weeks.
But Jay, you said something smart. I wrote a piece on Friday about how bad the consumer sentiment report was, and you were like, yeah, bring it on. When it gets this bad, it can't get a whole lot worse. And we saw at least a couple-day kind of fulcrum in markets where all of a sudden, I'm wondering if you're right. Do you think the bad news is priced in here and the economy will actually be stable? I don't mean to ask you as an economist, but how are you positioning as a trader?
Well, I'll tell you as a technician, it's a contrary indicator. When you see sentiment reach historical lows like we did, lowest levels in September 2022, guess when we bottomed? October 2022. So that to me was a sign, okay, maybe it's a little of a capitulation phase. And then when you look at it over the long term, we had our 3 lowest ratings of sentiment going back to when? 2009. That was a historic low. I don't know if this is a historic low, but when I see readings like that, I'll take the other side of that trade every time. But we do have a lot of volatility coming out of Washington. So one data point at a time. But I think this is a tradable bounce. And let's see if we can get back a little higher than it.
Does tech kind of go back into the leadership here, as we've seen a little bit over the past couple of sessions, or do you have to look elsewhere?
Well, no, I think tech should come back, at least lead from a trading point of view, considering that technology and discretionary, the 2 biggest sectors that usually lead us on these rallies, those Mag 7 names, have been lagging. You get a bounce, it's going to take the market higher with it, because under the surface, it hasn't
There's the move that I was looking for.
Friday and Monday, we had
Had to come back and stop me out first.
To me, that's strength, and usually that will lead us to at least a near-term rally. Let's see what Jay Powell says, and maybe he throws cold water on it. But technically, I think we're set up for a nice little bounce here.
I know today's all about the Fed. We could jump out at any time, but Microsoft, what was the step? You know what? Jay Powell's walk. Jay, thank you. Jay Powell up right now.
Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rates unchanged. We also made the technical decision to slow the pace of decline in the size of the balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024.
Equal highs here.
Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment.
This is what I was looking for.
In our summary of economic projections, the median
Just didn't have the right trade. I should have moved my stop down below VWAP. Should have known VWAP is a good
to rise a bit below 2% over the next 2 years.
good barrier there.
In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year.
Now I got to wait for a pullback.
The gap has held steady for several months.
I did think it was going higher.
Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not the source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%.
Higher high.
Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion, while market indicators continue to suggest that the quantity of reserves remains abundant. We have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard Schneider with the Reuters. Thanks for your time. So 2 things on sort of the real side here, inflation and the GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remained as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariff and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
And so I think that's kind of the base case. But as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also frankly a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there's a level of inertia where you just say, maybe I'll stay where I am.
Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this: you do see increases widely in short-term inflation expectations. And people who fill out surveys and answer, questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the 5 year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation most recently has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But, given where we are, we think our policy is in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros for the Wall Street Journal. Chair Greenspan once defined price stability as an environment in which inflation is low and stable over time, that it doesn't materially enter into the decisions of households and firms. You see buy and abate policy changes in surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about
higher highs.
Significantly high inflation. We know inflation is faster. That's
Kind of figured that it was gonna
I think we were getting
do this.
closer to that.
Maybe we close this gap here.
Inflation was running around.
Although I wasn't able to
I do
take
think
advantage of it.
level of the tariff inflation
Got stopped out.
delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP in 2025?
So again, people wrote down 2 cuts the last time, and they look at the they wrote down
Market's up 1%, little over 1%.
2.1 to 1.7 in 2025. A tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those two kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the cost of doing that, given that the economy is still solid,
Yeah.
are very low.
Well, they're saying tariffs is causing some inflation.
Mr. Chairman,
It's like, come on.
So with near 4% unemployment rate, that should be low enough to bring people to the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on?
Yeah, so that's a feature that has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But job hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs. So you're not seeing people losing their jobs, but you're seeing the people who don't have a job having to wait longer and longer. And, the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet?
In labor or in other?
In labor and inflation, just across the economy, have we started to see new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area. But at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. And I think it's hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it will come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen very, very
Every time he says the word tariff,
so much of it is indirect.
has some algorithms.
Their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in the coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else?
It's got them.
And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last
pandemic? Yes.
Okay, because you could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course we're well aware of that, and it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we also we hear that people are very reluctant to take on, to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What Canada must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth. That the idea is you have.
There we go. Close that gap.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging, situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal, and then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really shows significant problems like that.
Well, just to follow up, yesterday the UCLA Anderson forecast said there's a high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability of concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, there could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this: we don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels. Still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So it has moved up, but it's not high.
Hi, thank you. Chris Rugaber, Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and
She's not going to answer that question.
Caused the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I no desire to change that answer, and have nothing new for you on that today.
Good answer. Good answer.
Maybe I'll have another mulligan. As you know, I want to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. It's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it. We don't dismiss data that we don't like. We force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind.
Higher high.
Again, I would just say we look at all of them, and that was kind of an outlier, but nonetheless, we take notice of it.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can respond early enough, unless you decide to be preemptive?
Yeah, look, we're aware of it. We're well aware of how things are going to evolve and the timeframes and all that. You know, we will use our tools to foster achievement of our goals to the best we can. And of course, we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully. And we think it's a good time for us to wait for further clarity before we consider adjusting our policy.
Do you think it's going to be hard to get clarity and the government might tweak? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. We're
coming up on target one, making higher highs.
Implemented, and then we'll know. We'll know what the decisions are, and we'll have to make assessments then about their implications for the economy. Those things will happen. A lot of them will happen over the course of in coming months, certainly over the course of this year, and we'll be adapting as we go.
Hi, Chair Powell. Rachel Siegel from Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the
1, 2, 3, get a red. See if we get follow through.
Through what that looked like over the last couple of months, if there were specifics from the January meeting.
I don't know. We're coming to the end of this leg, right? This move, which started like here.
And that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that.
I caught some of this,
in the sense that
or some of this.
You're trying to extract a signal from that, and the signal is what's
came back and tagged me out.
Economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was
or similar for tariff inflation, non-tariff inflation, ways that you're making.
That's sort of a special case of that. If the idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero. And you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know in a couple of months. We'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. We'll be doing that, so will everybody else, and we'll all be trying very hard to make that assessment. And I'm sure we will make a lot of progress on that, and we already have. But it's going to be a challenge.
Do you have a sense yet as to what in your mind would make something cross from noise to?
Yeah, 3 o'clock.
Like,
3 o'clock in New York.
Obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, it's something that was, in the service sector that was far away from anything that's tariff. You might think, okay, well, that is frankly,
making higher highs,
which by the way has been behaving well. Which for some time was kind of our problem. Now it's slow, but it's definitely
going higher
down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is the grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, and it's not the change in prices, it's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and I do completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts. The median was. So you come in and you see broadly.
It's the weekly.
Weaker growth, but higher inflation. And they kind of balance each other.
Higher highs with the green.
And unemployment is really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth.
There's the day.
Higher inflation, which call for different responses, right? So
made a higher high, pullback, making a higher high.
It's so highly uncertain. Is just, we're sitting here thinking.
That's the week. That's a gap. That's the 20-day moving average. There's the 50 and the 100.
Through reserve banks and put in the beige book and also through contacts at the board. And we get all that. And we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy.
Look at the 1 hour.
Sentiment is quite negative at this time. And that probably has to do with
that looks nice.
Turmoil at the beginning of an administration that's making big changes in areas of policy.
Very nice. This is what Nick is saying. Is like, man, if you trade more longer term, right? If you could just say, okay, if it breaks this, I'm going to a swing. And giving me a month to make it up to whatever your target might be. And you don't have to worry about time decay or options being expired. Raise a white flag on puts today. Yeah. But yeah, if you trade like the 1 hour, yeah, you could swing something.
So in the S&P, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not. But some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already.
You said tariffs 3 times.
Inflation is affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I guess the way I'd say it is.
It's right on target 1.
It was the flows in and out of the.
I know it really wants to get above this 1 green line here, because that's the weekly high. Make a higher high on the week. Very positive.
Broadly committee came around.
There it goes.
The view that we would do the same thing we'd already done. Once I guess in June, whatever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is,
just wasn't able to get in at any point. Well, I was, but you know how that works.
And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant. Where you begin to see some of the things we looked at begin to react a little bit. So we still
if you're on the
TGA is emptying out. So
side of puts, it's like, what is it in May again? I think they have their next meeting, and we're going to do the same thing. Probably trade the same way. Now this today will be saved, and I'll label it FOMC, August 19th, so that if you want to look at it before the next meeting, look to see how it trades. Look to see at the what was this? 1:30, just as he began to speak. Came back, hit VWAP. That was it. They like him. They like his conversations.
You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate
even if I really believed that it was going to do this, trying to get into a trade and hold a trade is hard sometimes. And then when you get stopped out, trying to get back into a trade plays with your mind. A lot of times you can say, I'm better off not trading at all. Okay, I missed it. I missed that trade. I tried. I tried to get it, and I didn't. And so that's okay. There'll be another meeting, another try at trading it. Hopefully somebody else was able to get in some calls and write this up.
But when we say expectations are well anchored, we're really looking at longer term, 5-year and out. There's really no story to tell 5 years and out, either in market based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation.
Now we're into par hours. Be funny if they close this gap.
Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government adjacent sectors, healthcare, education. Do you agree there's some weakness in underlying private job growth? And do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth.
Yeah, it was just moving straight up.
They're all jobs, but remember we're at very low unemployment for quite a time now. So
Risk on.
labor market, but it's something.
See, Netflix is up. Wow.
From our standpoint, employment is
Tesla's up big. Everything's doing good. So the question is, tomorrow, do we get follow through, or do we get another Friday, a red Friday? Oh, tomorrow's not Friday. Tomorrow's Thursday. I remember excuse me, I'm not going to be here tomorrow. Got to take my cat to the vet. And so that's where I'll be, but I will be here Friday. We'll be here to trade Friday.
We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet.
Yeah, making highs on the NQ, ES, NYM. Oh man, very positive, very positive. Or as David would say, it's very positive until it's negative.
Rapidly cooling housing sales, plunging confidence surveys. Today, not only the S&P marked down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut or we can hold what is a clearly restrictive stance or policy. And that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard. And in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you advise to pivot back towards rate cuts in May?
Like I think we're not going to be in any hurry to move.
Yep, I'm sure we'll. Those cats, they just get shots, right? Doctor fills them up and does this and that and takes a stool sample and I'll give them a shot. Make them feel better from this all this dust that's in the air and whatever else they're breathing that's making them sick.
Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, it lives its useful life, and then we take it off, and that was the case. There was really not meant to be any signal here. Over the past year, conveying the sense of the balance.
One thing good about having cats, you got a bug in the house, they'll find it. You got a bug.
So we just took it out. I actually would say that
they'll find it crawling around and get it.
Now about risks, and this is in pages 10, 11, 12 of the SEP. If you look, participants widely.
It's better than raid killing cockroaches. They see a cockroach, they might not eat it, but they'll tap it one too many times to where it dies and it turns over.
Just on the stock market, the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effect. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect.
Up about what, 1.58%? Like almost 9 points.
And I would just point you to the bigger picture again. The real economy.
If this gets up to here, I think that's the end of this this leg. Although it's 3:15 already.
Downside risks and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on.
I think the squeeze, all the shorts, the squeeze already happened.
And of course, we'll understand that, but you don't see that yet.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from, higher levels to pretty close to 2%, while the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Underlying inflation is still running in the twos with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed. The which would send $5,000 checks to every
Oh
tax.
no, not the Doge dividend.
President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
You know, it's not appropriate for me to speculate on that.
Good answer.
Or fiscal policy for that matter. So I'm gonna pass on that one. Thank you.
Good answer. I didn't say nothing about Trump or anything he's doing.
Tariffs have already having at least some impact on inflation. I'm just wondering how you and your colleagues in the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all of that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. Slows down the path and probably lengthens it, doubles it effectively by slowing it by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with principles.
They're going to fight right at this green line, simply because it's the
pretty strong support.
It's the weekly high.
Nothing to do with monetary policy, nothing to do with the size of the balance.
So above it, higher high, below it, we didn't do it.
Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. We can take our time getting.
That'll be
we're shrinking the balance sheet every month.
It'll be a long wick if it doesn't close up there.
Thanks very much.
At least for today.
That was Fed Chair Jerome Powell explaining the Fed's decision to keep interest.
All right, he's done.
Also characterizing the outlook as one where policy is in a good place. He acknowledged the uncertainty of policy implications from the Trump administration many times, but conveyed some flexibility in being able to move in response either to sticky inflation or some challenges to growth. Welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner today, live from Post 9 at the New York Stock Exchange. We have a big show coming up with Wharton Professor Jeremy Siegel, Charles Schwab's Lizanne Saunders, and Goldman's Jan Hatzius will get their first take on Chair Powell's comments. And joining me on set for the hour is Truist's Keith Lerner. Keith, market found some reassurance in what Powell had to say. For one thing,
50%,
saying that we really can only consider the net effects of any future policies, but also suggesting a willingness to look through an uptick in inflation and still have that outlook for potentially 2 rate cuts for the remainder of this year. What's your read on how the market took it?
Yeah, well, you're exactly right, Mike. I think he threaded the needle pretty well, and we also had a pretty oversold market. It's not a surprise that they cut the GDP forecast. It's not a surprise that we saw the dot plots, the inflation move up as well. I think that maybe somewhat of a surprise is this slowing down of quantitative easing. And when you look at the 10-year tightening, and you're seeing the 10-year Treasury come down, and that's giving a boost to the market.
That is true. That certainly helped. It would seem, in the S&P 500, just for context, is right up near yesterday's high, up just under 1.5% at this point. Keith, you can stay with me. Let's bring in the Wharton School Professor of Finance, Jeremy Siegel. Professor Siegel.
I like this professor.
First read here, there was not a great expectation that there would be bold policy pronouncements here, but there maybe was a little bit of tension in there that maybe Powell could have been more hawkish than he was.
Yeah, most certainly. I mean, I would characterize him as basically optimistic. He said that the real data is still strong. He wasn't alarmed. He said he saw the sentiment drops in the consumer sentiment, some business sentiment, but didn't say that always translates into slower economic activity. But as you said, remains very flexible to move on either side, and that's sort of an optimal combination. I also think that he was pretty clear that the Fed would not react to the tariffs if they brought about price rises, which he thought would be temporary. And that was something I was definitely looking for. I was wondering, would he go against those?
618 right here.
He seemed to imply that he would not.
This is usually where I look for reversal.
Sort of caught on to inflationary expectations, or
again, that's just me. If it breaks it, I say it's going to 100%. But if it reverses right here, that's normally where it takes place at the 618.
The dot plot, the summary of economic projections did imply a core PCE inflation going up by the end of this year to 2.8%. It had been 2.5, and yet collectively
but the market does what it wants to do, doesn't do what I wanted it to do.
And in fact, he did say he thought that tariffs perhaps were built into that projection to some degree. Although he, as I mentioned earlier, he said, look, the Trump administration's got a lot going on with policy changes in play for immigration, trade, regulation, and of course fiscal spending and taxation. And they're going to have to sum up the net effect of all that before deciding what it means for policy. Professor.
Yeah, and absolutely. I mean, it's a big drop from 2.1 to 1.7. It's the biggest drop that we've had in a 3-month period in Fed forecast for growth since the pandemic. I would have liked to have known how much of that drop was due to the big slowdown, as we know, in the immigration situation, and how much was a drop that he, thought could be due to the uncertainty and the dislocations caused by the tariffs. He didn't tease that out. Although you also note that the next 2 years also showed a slight drop in real GDP growth. So I was wondering if that is immigration or is that more tariffs? Although the very long-term growth, of course, that I think is 2028, Trump's end of office, that number wasn't changed. But I would have liked to have sort of teased out some of those sources of that real GDP change, because certainly it was substantial.
Yeah, it's also just kind of tracking, I think, where consensus GDP growth estimates have been going. I mean, the market is backing off just a little bit from the highs. You always have to offer that disclaimer that sometimes the initial reflex move is not the one that lasts. And he really did, of course. And Keith, there was no way he couldn't emphasize the uncertainty inherent in trying to make any projections. He said, I don't know anyone who's highly confident in their forecast. And also,
See, we came back here, 618, just pausing for a minute, trying to determine what it wants to do, allowing people to either buy calls or buy more puts, and then it'll make its move.
Even though we talked about the hard data versus soft data, economic projections are coming down. If you look at the market as a whole, valuations have reset somewhat, but the key pillar of this bull market has been earnings. So far, those estimates haven't been cut much, but we've seen GDP estimates come down. So I really think we're going to have to see those estimates come down. That's why, even though I think we are seeing an oversold bounce, which we thought would happen last week or start last week, I think the upside is going to be capped because you are seeing a change in the economic environment, and that's somewhat weaker. But again, a little bit of good news is going a long way the last couple of days.
Yeah, we're up only a few percent off those lows, as you say. It's still a lot more to be proven. Keith, Professor, stay with me. Let's send it over to our students.
Oh, they're gonna give back this whole move. It's gonna come all the way back.
You know, it's funny, Mike.
And then on the weekly, you're gonna have a big a big tail here, a big wick. See what the day looks like.
In the sense that we're well positioned to move in the direction we need to move.
Not so big right now.
I mean, the point is we are at, you know,
Almost as big as this one.
where we can cut or we can hold what is a clearly restricted stance.
But still got another half hour, but the day's over. Let's look at the week.
Which is, of course, a little confounding, but who knows, right? Maybe is that when he talked about the options again, it
Looks more like a spinning top with the bodies equal to this one.
We could cut if we need to, or we could hold if we need to. But notice no mention of
Another puzzle piece.
raising rates. And I asked about that stagflationary quandary that the Bank of Canada addressed, and he says we're not there now, and we'll figure it out when we get there. One other point I want to make, Mike, which is that the Fed chair mentioned pages in some of the economic projections that none of us ever look at. I just want to say, but page 97, I did look at them when he mentioned it. I should also always look at it, but I didn't this time. And he said, and what he pointed to was the idea that for the majority of participants, the risk to the unemployment rate is higher, the risk to growth is lower. This is the risk to their forecast, and the risk to inflation is higher. And that's where they're at right now, trying to balance all these issues right now.
Right, and you know, because he was trying to explain why they eliminated that wording about the balance of risk being roughly equal, and yet sort of pointed to that and saying things got exacerbated on every side.
Yeah, just gonna
I used to use the mantra, Steve, that policy.
just gonna keep the stream open until the end of the day.
You know, the cost of
Just want to see what it's gonna end up doing.
low because the economy is hanging in.
Now, if anybody ever heard of code triangle die out, all right, it goes up, comes back, it's a wash. It took that whole thing back.
Into what we call the hard data. That's really something that is animating Fed policy right now. If that changes, if you do get a spike in inflation, if you do get a spike down in growth, well, then the Fed is going to face the question that I asked him, but they're not there right now. And I guess he has the luxury because these are yet early days in the Trump administration, and for these policies to be working their way through the system. He did say the substantial amount of the increase in inflation is probably from tariffs, but you'll note that it doesn't pass on into 2026 or 27, which is maybe an initial sign that the Fed sees this as at least one-time rise in the price level rather than a broader inflation problem.
Exactly. Steve, thanks so much. And Professor Siegel, one other thing along those lines on the soft data is the chair was not really willing to endorse a close focus on, for example, the University of Michigan.
Wonder if it's going to get down to VWAP,
blown out to the upside.
or this is going to retrace some more up.
He didn't use it as an excuse to be more hawkish. I guess the real question is the economy still on a decent path to absorb some friction from tariffs, if that's what's going to happen first, and can the Fed respond in time? I mean, this is always going to be the interplay between expectations and the Fed's ability to be timely.
Right. I mean, he did mention that the market-based long-term inflationary expectations, for instance, those that the difference between the Treasury bond rates and the TIPS rates, which is often used, has really not moved much. So that's, I think, when he was talking about that stability. Well, what did interest me is I don't think one person mentioned April 2nd, which I think is one of the most important dates we have coming up, that hopefully will clarify the whole situation on tariffs, how big they will be or how they'll be negotiated, or some path to how they will be negotiated. I mean, I think that that's going to be very, very important, and it's only 2 weeks away. So hopefully, you know, things will be clarified, and certainly we'll learn from statements by the Fed members after that April 2nd date.
Right. And, before the Fed meets again, which is in early May, we're going to get the April 2nd date. We'll know, presumably, what we're dealing with in terms of tariff levels and breadth and everything like that. We're going to have the start of corporate earnings season. We'll probably have a better picture of what first quarter GDP was. What are your assumptions, Professor Siegel, for whether the fundamental story is going to hold together from between here and now?
Well, I think that really does really depend on the tariffs. I mean, I've stated on your show that I think, the tariffs and the scare of the tariffs and the uncertainty of the tariffs and the on and off of the tariffs has been the, by far, major reason why we've had this 10% correction. If we can get clarity on what it's going to be, and if it isn't going to spark a trade war, although it was interesting that Powell didn't mention that the trade war retaliation was actually built into some of those forecasts. But if we could be certain that that probability is low, this market could be very much poised for a nice recovery.
It's the 330.
We are seeing Treasury yields back off pretty substantially on, the collection of what we heard.
I'm going to see if this thing can't move up to the 618.
And I wonder if that seems to be mostly reacting
Now
to
set up
perhaps on the slowing of the shrinking of the balance.
set up tomorrow.
It's going to mean less issuance and will mean less issuance this year, or if it's just a conveyed greater flexibility toward easing. I think we are pricing in maybe a little more of a chance of more than 2 cuts this year.
Yeah, I think it's close. I mean, at first I think it did react to the slowdown.
What's tomorrow? Tomorrow's the 20th. Wow.
I think is material and certainly
It's already the 20th.
It's not a change in the final policy, but I mean his statement, clearly is. I think that is as well as the stock market is that I think the tariff increase prices is going to be a temporary increase, and I do not believe that it would be appropriate for the Fed to react to those temporary increases. Now, we got some pushback from one question of the reporter about, well, did you call, the pandemic the temporary increase? And he said, this is a very different situation. So holding that position, I think, is encouraging both to the bond and to the stock market.
Right. Yeah, Keith, you had a kind of, I guess, modest defense of transitory as a framework for thinking about how inflation works its way
I
through.
could buy a.
I think it's been a legitimate question as to,
No, I don't want to get 10.
is being super vigilant on inflation, if it's coming from tariffs, fighting the last war?
Yeah, no, it's a good point. I actually think
Might look at buying the.
because if we didn't have this August 2nd date and we saw some of the data change recently, they probably
The 570s for tomorrow.
even in the room for today. So
After the market closes,
the uncertainty, the longer it challenges businesses. The one thing we talk
like
about
$1.75 right now.
uncertainty is the market price for that? That's right. After highs back in February, we downgraded stocks. We said no. Now we're pricing some of that in, but it's more, I think, more of a balance at this point right now. I don't think there's a big risk reward call to be made right here.
Gotcha. Professor Siegel, we appreciate your time today. Thank you so much. Let's now turn to
This comes down, it might.
investment strategist Liz Ann Saunders, who joins us on the phone. Liz Ann, it's great to have you.
Might be a little cheaper.
We've been talking about the interplay between
I'll think about it.
what the market heard.
Usually don't like to buy, because I pay $175 for the call. But tomorrow, if the market opens up down, then you kind of lose that $175 right off the bat, or at least a major portion, depending on where it opens up. I would rather just wait until the market opens up and take a stab at it then. It's always a gamble. And that's always like based on what you think, right? The market's going to do tomorrow. Knowing how my my win to lose rate is, I'd probably be wrong. But not SPY. Yeah.
Everyone is sharing these charts of the policy uncertainty index.
Yeah, I think we're definitely going to start moving up now. Got to move up some more. Let me see, SPY on the day.
Well, you know what? I think it was Jeremy Siegel with whom you were speaking to just before. I believe it was he who rightly pointed out that there wasn't a mention of what could happen after April 2nd.
See, 50% is that the 580. 618 is the 590. So more so for next week. All right. Maybe we get there. So if I was the swinger, that's what I'd be looking at. Let me see, 580. Let's go 585. And we'll look to the 28th.
It obviously was digesting this huge rush out of mega cap stocks at the same time we got some kind of an economic growth scale. What does that leave us, in your view, Lizanne, in terms of the valuation, the kind of tactical setup for stocks right here? Did much get accomplished, I guess, with that pullback?
Well, anytime you have a correction, you do ease some of the valuation excess. I guess the rub for some segments of the market, inclusive of the magnificent.
Let's see, we said 585 about.
Not in negative territory, but a year ago.
Yeah, so you could buy them for like $54 right now. And those are 2 weeks out. I think it's March 28th. See how far out that is. Nope, for next Friday, March 28th.
As I always say, the better or worse can often matter more than good or bad. And I think it's the trajectory. But we did see a little bit of easing of those valuation concerns. Now we have to see whether the setup, given that estimates have come down for 2025 broadly,
Yeah.
even those names, whether yet again the bar has been set
I hear you there.
The first quarter reporting season came to what we had for fourth quarter, which was too low a bar, 9.5% expected at the start of the season.
Yeah, you seldom do. The only thing is when you do a straight put or straight call, you don't limit your upside. So if I did a debit spread right at the money, then I'm going to cap myself on upward limits, right? I'm only going to be able to make so much, lose only so much, but make so much. That's why if I go further out to where I think the market might go, and I buy this, it's cheap, $55, and that's just one put. But I mean, how much could you make? Let me clear that thing. I don't know, but more than $55 if it was to move up in a week's time that high. Or you could, I mean, as the market moves up, these things will go up in value. But the market would have to move up. Doesn't have to come all the way here to make some money. I can make $50. But I mean that's just another way people play these, right?
In terms of the connectivity to earnings, it really is the profit margin story. And I think one of the problems with fourth quarter reporting season, which just finished a few weeks ago, is not so much that there was direct downward guidance. It was just the uncertainty factor. And when left with that limited guidance, I think analysts erred on the side of lowering numbers. They certainly didn't extrapolate the stronger than expected number for fourth quarter into this year. And if consensus is right,
I might do that. I might at the end. I like to wait until another 15 minutes, the end of the day. try to get that 85. We'll see.
So it could be a make or break quarter in terms of the outlook, not just for the first quarter, but
I'll try to get that.
What the trajectory looks like into year end.
It's only about $40.
Lizanne, great to have you weigh in today after this segment. Appreciate it. All right.
But if you are limiting your profits with a target, it doesn't make any difference. I have to think about that.
I think it is economic data. I mean, I think the market has really focused more on the health of the economy.
So if you're doing a spread, you're limiting your profit, right? But if you buy way out of the money, and the market for whatever reason does move to your strike price, I would think that your profits are not limited. I mean, you can make a whole bunch of money. If the market goes past it, you could keep making. But if you do the spread, to me, you're just limited. You know how much you can make, and you know how much you can lose. Same thing with buying it out here. I can lose $40.
You buy towards the bottom side, and if you get toward the top end of the range, we call it fine style back risk a little bit.
Yeah, so those all-time highs are like around 61.50-ish.
I think it's going to be a challenge to break through that in the near.
You're going to short Apple and find a high of day.
Tomorrow, and we'll bring you an exclusive interview with Double Line's Jeffrey Dunlop right here on Closing Bell. We'll get his first take on Chair Powell's comments at 3 p.m. Eastern Time. And up next, Goldman Sachs' Jan Honsius is here with his first reaction to the Fed decision. That and much more when we take you inside the market zone.
Let me go to risk profile. So that's the risk profile. There's break even. So if it costs me, let's see, I think it's trading like $56 right now. And I said 85. All right, that's there. So I can make $491. Or is that today? Oh, that's today. No, if it gets up there. Today's the 19th, yeah. So if it doesn't go anywhere, I lose my $56. Let's change this to the 28. So if it does go to the 585, and something's not right here. I have to play around with that a little bit more. But Ralph, you're gonna short Apple after the open tomorrow? Oh, after you find the high of day tomorrow. You don't like Apple? Or are you thinking Apple just moved up today? Just to move up.
On the moves we're seeing in some of the retail names, and Goldman Sachs' chief economist Jan Hatzius joins us for his reaction to the big Fed decision. Jan,
Okay.
with you, I mean, you were looking for the summary of economic projections to lift the year-end core PCE forecast to 2.8%. That's what happened. They did downgrade GDP growth, but kept the 2 rate cut median expectations. So,
Do you short this? Hey, Ralph, do you short the stock or do you buy the puts, the weekly puts?
I think at the margin, he was probably a bit more dismissive of the increase in inflation expectations that we've seen, especially in the University of Michigan survey, but also in a couple of the other surveys, Atlanta Fed Business Inflation Expectations Conference Board. So not to the same degree as on Michigan, but I think there has been some increase, and we don't know how that evolves as tariffs actually come into force. But I thought he was a bit more, he was dumping a bit more.
Gotcha, Nick.
The takeaway from that, of course, is that he's a bit more concerned about risk on the growth side, or at least would be tolerant of higher inflation in the context of potentially nudging rates lower.
I think that the meeting was, when you take it all together, just a touch more dovish for those reasons. There's also
There's that Apple 1 hour.
On QT, that's not a monetary policy tool. They're very focused on the idea that it's really rates, but nevertheless, it's also taken that way.
And so, I mean, he didn't profess, any greater vision of exactly how things are going to unfold than any of us have. But he's saying, there's these 4 policy forces, Trump administration on fiscal, immigration, trade, deregulation, and
it looks. That's that death candle, right? And that's the daily. That's that death candle. So you might be good with doing that.
Well, I think it will take a while. Now, of course, we've got April 2nd. We've got the announcement. We'll see what happens in terms of tariffs, how they calculate the reciprocal tariffs in particular, because there's a big bid ask on what you can do if you just look at tariffs that our trading partners impose on us and compare that with U.S. tariffs. That difference is very small. But if you say VAT is also tariff-like, that would imply a very big increase. So we'll learn quite a lot over the next month. But you're right, if you take all the other aspects of policy, that's going to take a long time, especially because fiscal policy is on a much slower path. And so that would suggest, it can still take a while before they actually get to cuts.
Oh, that's ugly candle. You can see it came up and hit the 618. And I say always, dusted a lot, right? That's the perfect place that if you're thinking about reversing, that's kind of where it reverses. It's not much that I know, but I do know that it's common for it to do that. So if you're looking to go short or to buy puts, that's the best place that I like to. Or if it's the other way around, buy calls to reverse.
Does it seem as if the market, the economy has that either the momentum coming in or solid consumer balance sheets? You have these offsets to whatever pressure points we're getting, that it seems like it can fight its way through this period of thing.
Well, I think
they're just pushing this thing down.
The U.S. economy, right? The productivity numbers have been great. We're still getting a tailwind from the post-COVID normalization. Wages have been growing a lot more quickly than prices. So we're coming into this period of policy uncertainty in a good spot. We're going to have to see how much of a drag we're going to get from, especially the tariffs. We're in a similar place as the Fed. Our Q4 to Q4 growth forecast 1.7%. And I do think there's going to be a slowdown, but we're going to have to see how substantial it's going to be, and that probably is going to take a little bit.
And I know you've done a lot of work on the immigration piece here, which perhaps is a little bit more of an immediate impact if you look at a lot of the real-time data. What does that mean? Because it would seem as if it might help put a lid on the unemployment rate at the same time it could curtail payroll growth.
Yeah, I mean it's also going to be a drag on growth from both the demand side and the supply side. It's going to be smaller. I mean, we don't think that the impact of that is going to be all that large. Certainly, if you compare the pace of immigration to what we saw pre-pandemic.
Just a reminder, I'm not going to be here tomorrow, but I will be here Friday.
2023 was such a big outlier that you really ought to be comparing it with pre-pandemic.
So if you're looking for me tomorrow, don't say, "Oh, Chandler got mad," and so you don't want to come back. No, got to take my cats to the vet. So I won't be here. I will trade at some point, right? Not going to take me all day, but I won't go live. I'll just come back and trade the market. But I want to trade Friday. Let's see how Friday's going to do this time. It's going to be another bloody Friday, or we're going to be green like a leprechaun Friday.
I think that would be more stimulative.
And general financial conditions at this point, you feel as if they're okay, they're relatively in decent shape?
Well, we've gone from having a fairly meaningful positive impulse from financial conditions late last year, on the order of 0.5 percentage point to growth, maybe 3/4, to a mild negative impulse because of the recent sell-off in the stock market and tightening in financial conditions. But nothing dramatic so far. Call it a 0.25 percentage point.
Got it. Jan, quick.
Okay, I'm done listening to you. So I'm just going to wait for the market to close, and I am going to pick this up. Just going to buy one call, the March 25th or March 28th of March. 585 call. Just going to pick one up. It's going to cost me $46 right now. And just hold it for a week and see what it does. I do believe the market wants to move up higher now. Now they got the Fed meeting out of the way. We're making higher highs. Hey, David, take it easy, man. Stay safe, and I'll see you on Friday if you're around. Market's going to close here in about a little less than 3 minutes. See what this is trading at. There you go. And it gave it to me at 44. $44 that is. I thought it might take a little while to go, but it didn't. They gave it to me right away. Right away. So I'm good with that. We'll just track that and see how that goes. All right, the market's ending. Let's see where's it ending at. Like right at the 566. Let's see what was on my chart. 565. So it stayed right there. Yeah. That is where it went. I'm just removing off my lines because try to keep my chart as, there's the bell, as clear as possible. It's going to show the highs for tomorrow right there, so I'll move that. See if there's any more. Shouldn't be. No. All right. So that's where we ended the 567, 567.16. All right. Well, I appreciate everybody being on here, especially these last 7 people. Maybe you just got the the stream up and you're letting it go. But 9 people now. But I appreciate all you guys' help. I appreciate you being here. I appreciate everyone. And we will see you not tomorrow, because tomorrow I got to take my cats to the cleaners, or to cleaners, take the cats to the vet. But I will be here to trade Friday. Yeah, Ralph. See you on Friday. This is Chandler's Retirement Live saying, lights out.